Hello. Epigral Limited latest earnings are finally out. In the last year, the stock has fallen by 47.44%. In the last 5 days alone, 12% decrease in the stock price. So let us take a look at the latest earnings. So here we have the latest earnings of quarter three fiscal year 2026. All these numbers are in crores. Revenue falls by 7% from 649 crores to 603 crores. Gross profit declines by 30% from 282 crores to 197 crores. EBITDA declines 44% from 183 crores to 103 crores. EBITDA margin of 17% versus 28%. Massive drop in EBITDA. Even worse, depreciation cost increased, finance costs arose from 0 crores to 11 crores, profit before tax declines by 64%, profit after tax declines by 62% from 104 crores to 39 crores. Profit after tax margin drops from 16% straight up to 6%. Massive, massive drop. Some key highlights for this quarter though. Okay, first is this. Plant utilization stood at 78%. Okay, they're saying it's similar to the previous quarter. To similar to previous quarter, plant utilization remained the same. Now, the reason for the EBITDA margin. EBITDA margin stood at 17% versus 23% in quarter two fiscal year 26 on account of drop in realizations and increase in cost of raw materials. So raw material costs increased while the sale price of the products decreased. Okay, so raw material price increasing, but the selling price of the products decreased. Okay. And for the whole 9 months of fiscal year 26, they have given this reason. Sales volume dropped in the 9 months of fiscal year 26 compared to 9 months of fiscal year 25 on account of subdued demand because of extended monsoon and lower volume because of maintenance work. So, if maintenance work is an issue, that is not the worst thing. Of course, maintenance has to be done in some time, yes, for repairs and all of that, and maintenance, and subdued demand because of extended monsoon. Okay, so these two factors affecting the entirety of the first 9 months of fiscal year 26. Here we have return on capital employed, ROCE, dropping from 25%, 17%, return equity falling from 23% to 17% as the profits fell. Net debt to EBITDA rose from zero point 0.8 to 1 times. The higher this metric is, the worse it is in terms of balance sheet health. Now, revenue transition towards derivatives and specialty chemicals. So the entire business model or the products seem to be divided into two parts: chlor-alkali and derivatives and specialty chemicals. Their revenue transitioning towards derivatives and specialty chemicals. And you can see in quarter three fiscal year 26, 52% of revenue came from derivatives and specialty chemicals, 48% came from chlor-alkali. And I guess they want this. Maybe this is the more higher margin product. So they want to move more towards this. Okay. Now, thankfully, good good news. They have some nice expansion plans coming. So two products, CPVC. PVC, I believe, means polyvinyl chloride. The C I actually forgot, and epichlorohydrin. So these are a part of their derivatives and specialty chemicals. Remember specialty chemicals. So these are a part of them. These are two of the products in that segment. Okay. CPVC, they're adding 75,000 tons per annum of capacity. Total capacity after expansion will be 1.5 lakh tons, which means their current capacity is close to 75,000 tons per annum, meaning they are doubling their capacity. That is really nice. And when is this going to happen? When is the expansion going to happen? By H1 of fiscal year 27, meaning September of this year, September 26, the first half of fiscal year 27. Then epichlorohydrin, they're adding additional capacity of 50,000 tons per annum. Again, total capacity after expansion is 1 lakh tons, meaning they're again doubling the capacity. So that is also good. Same commissioning date. Same commissioning date. Finally, how much money are they spending? So we already saw this CPVC resin and epichlorohydrin. Okay, we already saw this. The capex spending. So as of December 31st, 2025, they already spent 337 crores. So in the last quarter, they're going to be spending another 113 crores for all their capital expenditures. This is for only fiscal year 2026. Okay, 113 crores of capital expenditure yet to be done. And they're making a small Wind solar hybrid power plant. I guess this is for their own use, promoting green energy and all of that. That is it. Epical Limited, not the best earnings, but maintenance work. There was extended monsoons. There is capacity expansion coming. Let us see how the company does in the future.